Broadcasting for the Sports Channel.
Alrighty, well, happy Halloweenie. We had a pretty spooky October. If we look at the SPY, the SPY, the white and black represents when October started. So it was a really much of a roller coaster market. The first half of the month was all out bullish. The middle was just chop and sideways. And then the second half of the month was completely bearish. So we struggled a little bit with swing trading this month, and swing trading was our biggest expense trades. There's a lot of odd gap downs, and the whipsaws just made swinging really tough, you know, closing near the high, then get gap down, closing near the low, gap up, sideways. You know, the principles were a little bit tough to read on the market. We want to be keeping track of a spreadsheet with all our trades because we want to find out what works and what doesn't. That way we can do more of the revenue trades and less of the expense trades and make a little bit more money. So you can take a look, you can pause the video and scroll through. This is exactly what my real trading looks like. Some fat wins, some deep losses right over here. And so we'll be talking about this as we go through the video and what works and what really didn't work. So first off, we're going to talk about our biggest revenue trades, and our biggest revenue trades mostly came from the game plan. Our biggest revenue trades were from Peloton. We caught this breakout all the way from 100, and we just rode some swing trades earlier in the month because the market was cooperating, and we were just day trading Peloton in and out, and Peloton was great to us. And it's important to note that the all-time high breakout setup is my favorite setup because it has significant follow through compared to other setups. So Peloton was a massive winner for us this month. We were mostly out at 120 on Peloton. Another great winner for us this month was Beyond Meat. We had this nice good move up, sideways consolidation, and then the pop, and we were just riding Beyond, day trading, a small swing trade all the way up to about 190. So Beyond was a massive revenue trade for us this month. NEO also contributed to a lot of our monthly profits this month because of the sideways consolidation and this big breakout. Every single time NEO had one of these explosive, monstrous days, we were a part of it. We caught this huge move on NEO all the way from here to here, 13% on NEO. And we also caught NEO all the way from 28 all the way up to about 31. So another 10% on NEO. And that's another all-time high breakout setup. We had a lot of great trades on D-Dog this month as well. We had the nice move up, sideways consolidation, and then the breakout. We constantly traded D-Dog from 110 to 115, and we took profits at 117, 117.50. D-Dog came back into 110. We took it from 110 all the way to 113. So D-Dog was a ton of revenue trades for us this month. And that was also in the game plan and also an all-time high breakout setup. Another repeated winner for us this month was SPCE, and SPCE, we took it over 21.50. We took profits at 22.50. Then later on, we entered in at 22.50 and took profits at 24. SPCE was in the game plan a couple of times, and that was a great setup for us. And that was due to upgrades on SPCE. Now that we've talked about our biggest revenue trades this month, it mostly came from day trading and the game plan. Let's talk about our biggest expense trades because there's two sides to trading. There's the offense and then there's the defense. And our expense trades were really tough based on swing trading because the market was just super inconsistent. We couldn't get a bid on some of these stocks. And we'll kind of talk about what led to those losses. But DraftKings, we had a lot of swings from $50 a share, and we had to cut those, and the spreads were just super wide. So we took a lot of slippage on DraftKings. We kept trying to dip by it, but kept having to stop out. And that was mostly because we were fighting the trend. So that's a lesson to learn. Always stick with the trend. Even though you might get cheeky and catch a few winning trades going counter trend, it's a lot harder to make money going against the trend. And DraftKings was also a little bit of a victim due to the virus. There's a lot of virus cases increasing in the NFL. That's not really good news for DraftKings. So DraftKings, one of our biggest expense trades of the month. And you can always double check the spreadsheet and see where all the losses from DraftKings came from. If you want to pause the video, see the actual revenues, the actual expenses from DraftKings. BABO caused a lot of our expenses this month as well. And that's just because BABO just kept on breaking out to all-time highs and then coming back in. It just couldn't hold above this 310 level. It kept selling off, kept getting above, couldn't hold it for more than a day. And so we're in our swing trades. It's looking good. We're closing near the high of the day. but then we get a gap down and we have to cut it. So constantly in above 311, 310, and then having to cut beneath 310. So BABO is just a huge chop out. And BABA, the option chain, there was wide spreads. There's $50 spreads. That means I ended up paying usually about $50 to get in and $50 to get out. So right there's $100 down. That's about 10% of the total option cost, and that'll cause a lot of slippage, a lot of losses, more than it needs to be. A ton of big expense trades from this month were also from Disney. And Disney, we were swing trading in from $125 a share, got the nice gap up, and actually started to add to Disney in this 130 area because we got the 130 break, looking for a move just to test the top of this channel. But Disney, it couldn't get past the midpoint of the channel, and it started to break down. And Disney, we had to cut, and we just caught some fat gap downs on Disney. So we had to cut once we started to break the trend. And Disney was just an annoying expense trade all month. Disney, the liquidity was a little bit better than something like BABA or DraftKings, but I should have been a little bit more conservative on something like Disney, especially with the virus cases going up. Their parks have to be closed. And also we have this big daily or weekly bear flag that is starting to break down on Disney. And that's why Disney was a huge expense trade for us. Lastly, we had a pretty difficult time trading SPY this week. We were very whipsaw. We were coming down, breaking down, but gapping up, gapping down, going sideways, going higher, going lower, going higher, going lower, random rallies at the end of the days, random sell-offs at the end of the days. And SPY, we were just a little bit off on a lot of our put spreads and stuff. We were just $1 or $2 out of the money. We even strangled SPY, and that just was super tough. So minus 145, minus 189. SPY is one of the most difficult products to trade. I usually only use it for hedging. And even then, you have to pick your strike prices pretty tightly. So the main takeaways for this month is that I prefer day trading. I like being in the driver's seat. I like being able to cut or take profits intraday whenever I see a resistance or if it breaks support. I like being in the driver's seat the entire time. And I like being in cash at the end of the day. That means each day is kind of like a fresh start. So I'm going to stick to a little bit more day trading and a little bit less swing trading next month. And we'll monitor the market environment as it's constantly changing back and forth. I also want to stick to the game plan a lot more and not deviate away from that. When I make the game plan, I have a nice, good, clear head. I can see the charts as they're standing still, and I can see the setups before they happen. And if I'm deviating away from the game plan that's given out every Sunday, it tends to be a little bit more choppy, and I have to be a little bit more nimble and think on the fly. So the game plan's nice because it's all there and set out and laid out for me. I also learned that this month I really want to stick to highly liquid stocks and options. DraftKings had $15 wide spreads, so $15 to get in, $15 to get out. That was just annoying. And BABA had the $50 wide spreads. That really killed. And so I want to stick to the tighter spreads. SPCE, NEO, those are great, nicely tight spreads. Even Peloton and Beyond had a little bit wide of spreads. I had to pay $50, $60 to get in and out of those. And so I want to stick to tighter liquidity, bid-ask spreads, always check those out. So if you go to the option chain, where's the bid at? Where's the ask at? If it's $100 wide, you might not want to trade it, like the VIX. I also want to be taking less trades. Less trades means less commissions. Every trade I take, I pay about $1.30 for it. So I want to be a little bit more selective this month, even if it means I miss a little bit more. Definitely got to control the FOMO demon and not be in every trade that comes my way. And then lastly, I want to stick with the stop outs. Pretty much every single stop out that I had this month was a good choice to stop out. I saved a lot of money stopping out. A lot of these would have been worth zero. Pretty much every single option that I cut this month would have turned to zero. So we might have even gone red for the entire month of October had we not stopped out. So a little bit less of a profitable month than the other months. In September, we racked in almost $3,000. In August, 2.5K. So October was definitely a grind and a struggle. Definitely not enough to live off of $434 a month, which is why we need to get better as traders if we want to make this a full-time thing. Alrighty, thanks for tuning in. Hopefully you learned something new. Have a great weekend. Stay safe out there. See ya.